Hey everyone, Ben here and welcome to Motivation to Invest. In this video, I'm going to discuss inflation, how it affects stock prices, stock returns, and how inflation eats away at that money in your pocket, and where's the best place to invest during an environment of increasing inflation, which seems to be what's happening right now. So this is going to be a really insightful video, guys, and you're going to want to watch this video all the way till the end. Before we get right into it, if you do want investing tips and exclusive stock market picks, which I'm personally investing into, then feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you're a regular viewer, welcome back, and feel free to give this video a big thumbs up. It helps out tremendously with the channel. And remember, guys, if you do want to check out the VIP membership group or our ultimate investing course, you can find details about those in the first link in the description below. With that being said, let's dive in. So firstly, what is inflation? Well, inflation is basically a rising in prices of goods and services. And as these goods and services rise in price, that dollar, that pound, that euro, that yen in your pocket will actually decrease in value, decrease in its purchasing power. Just think back to houses. That's the best way to think of it. Think back to the price of a house in the 1990s, the 1970s, the 1980s, compared to the price of a house today. That's inflation. For example, your parents may have purchased a house for 20k, and today that same house may be worth over 200k. That's inflation. That's the rising in prices, in that case, in real estate. And if you would have kept that 20k in the bank back then and you didn't invest in the real estate, then that 20k would have actually lost purchasing power. Here's a great calculator to show you guys what I mean. For example, in 1995, if I had $100 and I kept that in my bank all the way till today, that would now be worth just $58. So it's lost over 40% of its value during that period of time by me just keeping it in the bank. So that's a great reason to actually invest. And this is why billionaire hedge fund manager Ray Dalio states cash is trash, as it loses approximately 2% in value each and every year when it's not invested. For example, diving in right here, the Federal Reserve in the United States, which is the central bank in the US, the world's largest economy, they have a target inflation rate of 2% each and every year. And recently they've released some new numbers and it's actually come out a lot higher than expected, so 4.2%. Now the Federal Reserve states this is transitory, which means it's temporarily high inflation and won't actually last a very long time, but they don't know when. And the Federal Reserve doesn't really know this stuff. They haven't got a crystal ball. They have a lot of data, but they don't really know exactly, or this wouldn't be unexpected inflation. They would have expected it beforehand. Inflation is basically categorized as too much money chasing too few goods and services. And what happened in 2020? Well, governments from around the world printed trillions of dollars, guys, in stimulus packages, which did help us get through the global pandemic, but that doesn't lessen the fact that money printing was abundant in 2020. To show you the extent of this, here's a chart of the M1 money stock in the US. And as you can see here, it was trundling along very nicely, and then boom, 2020 hit, and it went to the moon. Now, what was this that happened here? This is called Federal Reserve money printing, but many governments from around the world also did this, and the money supply actually increased by 1/5. So basically, 1 out of every $5 in the US was printed in 2020. Now, to me, that is crazy numbers, and that is a reason to believe that inflation would occur. Now, what happens if we get serious inflation? This is called hyperinflation. So hyperinflation, I'm not saying this will occur, I don't believe it will, but hyperinflation is basically when governments print so much money that the money just becomes worthless. So, for example, this happened in Germany in 1923. We have a guy here had a wheelbarrow of paper cash, which you have to use to actually buy a loaf of bread. So I know what you're thinking, Ben, that's so long ago. Do things like that happen these days? Haven't we learned from those situations? Well, it seems not, because countries such as Venezuela today have hyperinflation. So you need this amount of cash today to just buy this chicken. Now, do I think we will have hyperinflation? No, and neither does the central banks from around the world. However, even minor inflation can cause major effects on stock prices. So as you can see here, interest rates in 2020 were less than 1%. And this was a great time for growth stocks. They were flying high. Investment firms like ARK Invest were doing extremely well. But then interest rates started to rise. And as we can see here, growth stocks started to decline. And there were many headlines such as ARK is sinking, ARK Invest, the growth stock investing firm. And this is basically because Before in 2020, when the interest rates were low, investing into stocks was the only game in town because you're not going to invest into bonds and get less than 1%. But now you're getting close to 2% risk-free. So this means the riskier stocks will have their valuations adjusted. So historically, what has happened to stock prices during times of rising inflation? Well, diving into this historic chart here, so this is from a professor of finance at New York University. All credit to him for putting together this. Ashwath Damodaran, I believe his name is. And as you can see here, back in the 1970s, expected inflation was 7.41%. And there was unexpected inflation, which was 2.8%. So quite high inflation, really. And stocks were virtually flat for the entire year, which wasn't great at all. However, if we go to a period between 2010 and 2019, expected inflation was less than 2%, and unexpected inflation was actually even lower than that. And we had stocks having incredible returns of 12% compounded each and every year. So that's an incredible amount. Thus, where is the best place to invest? Well, let's check out the historical data. So historically, this is looking at unexpected inflation and its effects on gold and real estate. And as we can see here, during times of unexpected inflation, so sharp upticks here, like we saw back in the 1970s, we had a massive increase in the price of gold, which happened here, up 140%. And we also have nice boosts in the price of real estate. So REITs, or real estate investment trust, is a way of investing them via the stock market. So that's what we see. We basically see that gold and real estate, or REITs, are actually great places to invest during times of rising inflation. Now, this is just an historical figure. So now you guys may be thinking, Ben, isn't Bitcoin a hedge against inflation? Well, many people do believe it is. However, historically, looking at the past data, Bitcoin has tended to perform very similar to a risky sort of high-risk growth stock rather than the same as gold. And even if I dive into the recent price chart here for Bitcoin, we can see there's been obviously a massive decline at the moment, and it's back down to where it was at the start of 2020. Now, of course, there are many other issues which do affect the price of Bitcoin, including if Elon Musk sends an interesting tweet. However, it does show that there's no evidence yet that Bitcoin is a hedge against inflation. Now, the argument is that there's a limited supply of Bitcoin which can be mined, thus it should be a hedge against inflation if the government's printing lots of money, but there's no historic evidence of this yet. But Bitcoin hasn't been around for such a long time during a period of high inflation, so it's very difficult to actually judge how it will perform in the future. So how am I investing during this high inflationary period? Well, I have some gold in my portfolio, I have some silver in my portfolio, and I also have some lithium in my portfolio, which is used for electric vehicles. Now, do I have a massive amount of these assets? Well, I don't have loads of gold in my portfolio because gold doesn't really produce anything. It's not really a business which makes money, but I do have less than 5% in my portfolio, and I think that's a good target if you do want to invest in gold, silver, or lithium, to at least have some in your portfolio to balance should we continue to have high inflation. So if you do want to check that out, guys, I recommend iShares Physical Gold ETC, which is basically stands for an exchange traded commodity. You can basically buy and sell gold just the way you would a stock. Now some people argue you need to own the physical gold, but personally, if you do want to be able to trade it quick, which I personally do, then an iShares Physical Gold ETC is probably the easiest way to actually do that. You don't have to pull up your floorboards and put gold under there, waiting for a period of high inflation, then try to sell it in a jeweler's during a time of crisis. So what about growth stocks, Ben? If you actually sold all your growth stocks right now, well, actually, I've not sold any of my growth stocks at all. I've been buying more when they reach my valuation points. Now, if you guys do want to know exactly my valuation points and fair value for all the different stocks in my portfolio, then feel free to check out that first link in the description below for our Ultimate Investing course or our VIP membership group, and I detail my entire stock research platform. You also get access to our VIP membership group, so you can keep up to date in real time exactly what I'm buying and selling. And if you guys did appreciate all the research which has gone into this video, coming up with the pure facts, not just coming up with opinions, then feel free to give this video a big thumbs up. That helps out tremendously with the channel. If you haven't subscribed yet, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. With that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.